Good afternoon, traders. Welcome to the Moy Analytics Afternoon Energy Podcast. Going into Sunday, May 24th, we're going to start off with natural gas. Okay, natural gas, we had left a significant bullish reversal below a number of days ago, but Friday we left a minor bearish reversal above and negated that bearish reversal below, warning of pressure for days/weeks and a possible run back down for these lows here at 261.50. If we leave a maintained gap lower, higher on Tuesday, that'll warrant of decent strength. And just a reminder to those of you overseas that there will be no analysis on Monday, as it is a U.S. holiday. Okay, the break above 276.90. I said projected this upward 115 ticks. We attained 369. And the trade above 272.50. I said warranted decent strength. We saw 413 of that. A number of other bullish calls in here. This one here, the trade above 289.80, projected this upward 90 ticks minimum, 230 ticks plus maximum. We attained 240 ticks of that. But like I said here, I maintain gap lower. We'll leave a minor bearish reversal above. That will negate the bullish reversal and likely bring in pressure for days. We also fell below this formation right here. I said to get short below 296.60. So we broke below there and we came off down to 288.80. And I also suggested to get short below the 292 area right in here. I'm not sure if that was a decent penetration or not. Let me just take a quick look. A decent penetration in there was 35. Yes, that was a decent penetration of this right here. So a decent penetration back above that would warrant a decent strength. That's going to come in at 292.90 plus 0.8 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time. But as it stands, it projects this downward at least 200 ticks plus. In the crude oil, I'm not going to go over all the higher time frame stuff. We held exhaustion with a 105.21 high and rolled over to 94.73. We also broke below this formation here, or this formation up here at 102.31, which I said to get bearish below, which I said projected this downward $5 plus, and we've come off from 102.31 down to 94.73. And then I also said the break below 97.58 would warrant a pressure. So we did finally get the decent break right here. We did not break below this one decently though. A decent trade below this formation will also warrant a decent pressure. That's going to come in at 96.74. Plus 3.3 per hour starting at 6 o'clock p.m. Sunday. And if we break below there, decently back up through it, decently look for decent short covering to come in. Decent trade above this formation will also warrant a decent strength. That's going to come in at 98.15. Starting at 6 o'clock p.m. And in the RBOB, or unleaded gas, we have a good likelihood of seeing range expansion. I'm not going to go over all the higher time frame stuff. The trade below 352.26 projects this downward 17 cents minimum, 47 cents plus maximum. We've attained 26.53 cents of that so far. And decent trade above this formation right here is going to warrant a decent strength again. That's going to come in at 348.27. minus 3 per hour starting at 6 o'clock p.m. Eastern Standard Time. And I also suggested if this rolls over into a full bearish correction, the minimum target is 306.43. Also, the minimum target for crude oil would be 86.27. And the heating oil, bear with me a moment. Okay. I'm not going to go over all the higher time frame stuff. The failure below 393.86 brought in 25.29 cents of pressure, and the trade below 381.43 brought in 12.86 cents of pressure. Trade below 378.49 projects this downward 10.5 cents minimum, 67.5 cents plus maximum. That minimum and maximum are going to be shaved. So that minimum's been about attained now, and that maximum will be shaved a bit also. If we break back above this formation, actually we have a descending formation right now, which is going to come in at 379.21 as of 6 o'clock p.m. Sunday. That decreases 40 ticks an hour. Decent break above that will warrant decent strength, and decent trade above both of these formations will also warrant strength. And those formations come in at 391.80, 391.98, and 383.13. That's both of these lines right here, respectively. And the Brent maintain gap low, and a Brent will leave a medium bearish reversal above. Not going to go over the higher time frame stuff. The trade below 110.60 has brought in pressure down to 101.31. I also said we left a minor bearish reversal above. So we've come off from the 108.16 open, and then the break below 104.47 also under pressure. So we've been seeing that. If we break back above that line decently, that's going to warrant a decent strength. That's going to come in at 105.85 as of 6 o'clock p.m. Sunday. Okay, and the gas oil. The trade below 1195.40 brought in 94.9 pressure. And if we fail below this formation right here, this is going to warn of additional pressure right here. That's going to come in at 1105.53 plus 19 per hour starting at 6 o'clock p.m. Sunday. That's the June contract, but we should have rolled into the July contract, so I'll be putting that out on Tuesday. That's bearish also from failing below here and failing below here. Decent trade back above this line right here, which is going to come in at 1123.88 plus 40 per hour starting at 6 o'clock p.m. That's going to warrant a decent strength. And going into Monday/Tuesday, and the cadence is the RBOB is the strongest of the three, the heating oil in the middle, and crude the weakest of the three relative to one another. Thank you for watching, and I'll see you in the next podcast.